it's time to go to our first company on the show, Shriram Finance. Well, they saw strong earnings momentum led by lower operating expenses, and also there was a decline in provisions. We have with us Mr. Chakravarti, who's the managing director as well as the CEO of the company. Hi, Mr. Chakravarti. Good morning, and thanks so much for joining in. Well, your first quarter is done. Now, give us a sense about how do you see your AUM grow from here on? And could you tell us the segments where you're seeing traction? And are there a couple of segments where there is softness?
Morning. See, the prospects future, we've actually already committed for a growth of about 15%, though in the first quarter we have grown by about close to 19%. So typically first quarter is a slow quarter, but we've been able to do well in the first quarter. So considering the performance of first quarter, probably we may look at giving a revised guidance post the second quarter. But as of now, we are committed to that 15% growth, which we have, given a guidance on. So as far as the segments are concerned, all the segments have grown. Probably in terms of absolute numbers, gold and personal loan has grown well for us. Commercial vehicles, this quarter we had a uptick on the new vehicle funding. I mean, It's across the board. I don't see any weakness in a specific product segment as of now.
All right, that's interesting that you will look to revise your guidance upwards by the end of the second quarter. That's good to know. Mr. Chakravarti, just wanted to understand, I mean, you've had a couple of quarters now of the combined entity. What have been the kind of incremental cross-selling opportunities, and as a result of which, what is the incremental growth going to be in terms of AUM?
It is. I would not like to comment on the incremental, give a specific, put a specific number to the AUM. But the indication I can give you is we have added about 498 new gold loan branches. In the sense, the existing STFC branches, we have introduced gold loan in about 498 branches as of June end. And this quarter we have seen a growth in AUM of about close to 400 crores. So it's basically addition of new branches as well as the old branches also have done well. But this is something that will give you an indication of how we are using this. Similarly, the personal loan growth also is because of the increase in increase in the reach because of the merger, that we were able to service customers more quickly and more of them.
So if you could give us a sense, a little more qualitative detail as to your existing customers from both these places. Was there any incremental loan from the other vertical to those people? I'm just trying to understand.
It did in the gold loan. It is happening in the gold loan.
Okay.
It is also happening in the MSME loan. See, both these products we were able to cross-sell to the erstwhile commercial vehicle customers.
All right, Mr. Chakravarti, let's get a couple of other numbers out of the way then. How's your average cost of funds shaping up, and what does that mean for NIMs? And also, asset quality has improved a little bit by the end of this year. What will it look like?
So on the credit costs, on the fund side, I think our average cost, our incremental borrowing cost has come down slightly. We actually expect it to stay at these levels or come down by about 8 to 10 bips in the next couple of quarters if there is no intervention from the regulator. So on the costing side, there is no issues. On the NIM side, there was a slight pressure this quarter because of the change in product mix, and also there is a 7 bips of incremental cost of funds in the quarter. Rest of it was due to the change in product mix, where we did more of a new vehicle lending in this quarter. But that's not something to be worried about, and we think we will be able to hold on to the current level of NIMs going forward also.
All right.
Asset quality?
Asset quality side, we are seeing a steady improvement quarter on quarter, and we expect even July also so far has been good, touch wood. So we expect improvement in both stage 3 and stage 2 assets going forward.
Right. So you had guided for 2.5%, 2.4 to 2.5% net NPAs by the end of this year. You are on target for that and sub 2% credit cost, right?
Yeah.
All right. And finally, before we let you go, any sort of value unlocking opportunities in any of your verticals?
No, nothing right now. Thank you.
Nothing in the housing finance business as well, is it?
Nothing as yet.
Okay, we'll hold you on to that, and we'll have a conversation around this in a couple of quarters as well.
Sure.
Your smile is an interesting one out there. Thank you, Mr. Chakravarti, for joining in.